What's up, Money Minds? Welcome back to another video edition of Market Priest by the Minority Mindset. Today is September 23rd, and here's some business and financial news you can finally use. In case you missed it for our last newsletter, we are out of the office for the rest of the week this week. The reason being is because we are at FineCon this week, and Jaspreet is actually the keynote speaker. So these next couple newsletters will be a bit evergreen and will be a little different than what you're normally used to seeing. This is the second edition of our Evergreen News series, but if you want to check out what we're doing right now at FineCon, follow us on our socials like Instagram, Facebook, and TikTok. I'll leave a link on exactly how you can do that in the description below. In addition, we recently launched the Minority Mindset Mentor Program, where stock market insiders actually show you how to build long-term wealth. Our coaches in the program are highly qualified, have been investing for years, and have well over 7 figures in the market. And as soon as you sign up, you will join a growing exclusive Discord community with access to stock market coaching every single day. And right now, we're giving everyone that joins a 10-day free trial to the program. So don't delay, join our Minority Mindset Mentor Program and start investing like a pro today. In today's financial tip of the day, it's not just beginner's luck. Before you put your money anywhere, you should do the research and see what type of strategy you want to go with. You will probably find that there are a ton of different options when it comes to investing. So if you're new to investing or just an expert that wants a refresher, our team wrote a complete guide to stock market investing on our website, and I'll link it for you in the description below. In our first main story of the day today, we'll be talking about the dreaded I word. That's right, we're talking about inflation here. Over the last year or so, inflation has been haunting a multitude of sectors, but it has especially been blowing up the e-commerce industry. The average price for online goods has jumped by 3.1% over the last year. In addition, price hikes have hit almost all of the online categories so far this year, including pet products, medications, clothing, and furniture. At the moment, it looks like e-commerce transactions are on track to account for $1 of every $5 spent in the US. That's up from $1 of every $6 back in 2017. This all comes at a time when e-commerce sales have never been higher. Customers have already spent $541 billion on online sales during the first 8 months of 2021. That is a 9% increase from last year and a 58% increase from the same time back in 2019. So where's all this coming from? Well, inflated prices come from supply chain bottlenecks, low inventory, and increased labor costs. And as the pandemic continues to rear its ugly head, supply and demand continues to fluctuate, which is affecting prices for consumers, suppliers, and distributors. Basically, there's a lot of moving parts. Like most things involved in the pandemic, it's a waiting game for things to get better and for life to go back to normal-ish. In our second main story of the day today, we'll be talking exclusively about jobs. Employers are finding new creative ways to bring new coworkers on board, which can't come fast enough because we've all heard about the ongoing labor shortage that has been hurting companies left and right for the past year. At the end of May, there were over 9 million job postings in the US, and job postings were up by 36% on Indeed.com in July compared to the year earlier. At the moment, it looks like people do not want to return to jobs without seeing a little extra added benefits. One of those new benefits includes hiring bonuses. Plenty of places, from fast food to the medical field, have been offering sign-up bonuses to encourage workers to apply. Things have gotten so crazy that one nursing position was even offering $30,000 as an immediate sign-on bonus. Another new benefit is what's known as the 3-day rule. As of now, it looks like companies have stopped dragging their feet when it comes to calling back applicants. Especially companies that need to reach a hiring quota by the end of the year, some have been reaching out to applicants just 2 to 3 days after the interview compared to 2 to 3 weeks before. And lastly, a new benefit is childcare. A super difficult task for parents to take on during the quarantine was finding childcare. While many schools and daycares remain closed, it prohibits people from even being able to take jobs because they have to stay home with kids instead, which has led to some employers offering free or discounted childcare to all new employees, or even a monthly $800 stipend for childcare demands. There is no clear end to this labor shortage, but one thing is definitely for sure, job benefits are getting a little sweeter because of it. That is it for our main 2 stories of the day today, so let's take a quick break to talk about our sponsor, Robinhood. Robinhood allows you to invest in all of the companies you love, all commission-free. In addition, Robinhood gives you the tools that help you put your money in motion. And their easy-to-use app makes investing accessible, giving you the ability to customize however you'd like. Robinhood even allows you to set up customized news and notifications to stay on top of your assets as casually or as relentlessly as you like, which means controlling the flow of info is entirely up to you. Robinhood as a brand believes that the financial system should be built to work for everyone. At their core, they create products that allow you to invest at your own pace. So if you want to learn more about what Robinhood offers to all investors, I'll leave a link in the description below on exactly how you can do that. A big shout out to Robinhood for sponsoring this video, and now back to the news. In today's Mind Blown, we'll be saying goodbye to the Uber price surge. Uber has had a pretty interesting week. The ride-hailing company raised its outlook for the rest of this year and had some super exciting announcements for Uber enthusiasts. Uber now expects to report around $23 billion in gross bookings for the current quarter, which would be up from last quarter. It also expects that its losses for this quarter will not be as bad as expected. But in the most relevant news of the day, if you use Uber a lot, the CEO of Uber said that he expects the ride-hailing price surge to finally ease up by the end of 2021. Yay! But that is it for today's business and financial news. I know, a really short one again. Keep hustling, money minds, and I will see you all in the next one.